Hey everyone, welcome back to Corporate Decoder, the place where we translate financial jargon into plain English. And today we're looking at Moving Image Technologies Incorporated's filing. It's a quick look at a deal that's supposed to boost their speaker business. So, on the 31st of October of last year, Moving Image Technologies entered into a deal to buy a product line called Digital Cinema Speaker Series, or DCS for short. Think of them as really good speakers for movie theaters. They bought this from a company called QSC LLC. It's not just the speakers themselves, but also all the stuff that makes them work, like the patents, the designs, and even things like existing customer orders. This sounds like a pretty significant purchase for a company like this. Now, the price tag for all of this was $1.5 million. That might sound like a lot or a little depending on how you look at it, but for a whole product line, it seems like a calculated investment. The agreement itself had the usual promises and assurances you'd expect in a business deal, making sure both sides are being upfront about everything. And just to be clear, the company officially completed this purchase on the same day they signed the agreement, the 31st of October. So, this DCS loudspeaker product line is now officially part of Moving Image Technologies. They then put out a press release about this acquisition on the 3rd of November. It was to announce that they'd acquired the globally recognized Digital Cinema Speaker Series loudspeaker product line from QSC. This press release is essentially an advertisement for the deal, letting people know what happened. Now, they are telling us this information we are sharing today is part of that announcement. The actual deal itself, the asset purchase agreement, is filed as an exhibit. This is the legal document that lays out all the terms and conditions of the purchase. And of course, the press release from the 3rd of November is also an exhibit. It's good to see they are sharing the official announcement alongside the legal paperwork. Now, this filing doesn't contain detailed financial tables for this specific quarter, which is a bit of a bummer for us here at Corporate Decoder. We love digging into the numbers to see the real financial picture. However, we can still understand the strategy behind this move. Buying a product line like this means Moving Image Technologies is likely trying to expand its offerings and capture more of the market share in cinema sound systems. It's a way to grow by acquiring an existing proven product. What does this mean for the company? Well, it shows they are willing to invest in growing their business. Acquiring the DCS line could bring in new revenue streams and potentially push out competitors. However, it also means they've taken on this new product line, and they have to make sure they can successfully integrate it, support its customers, and make it profitable. The success of this acquisition will depend on how well they manage these new assets and whether they can leverage them to boost their overall performance. Keeping an eye on their future financial reports will be key to seeing if this $1.5 million investment pays off. Alright, that is our quick breakdown of Moving Image Technologies' latest filing. What is your take on this acquisition and what it could mean for the company's future? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate breakdowns. And don't forget to join our Discord community, linked in the description for even more discussions. Thanks for watching, and we'll see you in the next video.